Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, welcome to the August 14th edition of Basis Loaded with Joe Schmit. I am Joe Schmit. This episode, as always, is produced by Paige Driscoll with help from the EverAg Insights team. It's back to school season as summer winds to a close. What better way to celebrate than with the latest from the NDPSR report? We'll start this week with butter. This butter number coming in at 309.87 represents a -1 to the CME 1-week average of 311 even. We traded 11 loads at the CME. It's interesting to achieve that 311 level. The CME was up 2.5 cents week to week. Here on the NDPSR, we actually lose a little bit more than 2 cents. So that's how that basis goes from positive to negative. This is a little bit unforeseen, this lower price on the NDPSR. I guess one positive is they were able to move north of 3 million pounds. So the manufacturer was able to move some weight, however, had to discount to do it. What's most interesting about this report is if you go back to the August 3rd week, they revised that price down a penny to 312.17 and added 900,000 pounds. So we had a lot of weight going in last week to pull that weekly volume north of the 3 million pound level. And then again, we were able to achieve that 3 million pound level 2 weeks in a row on slightly lower than expected basis. Up next is cheese, and we'll start with the blocks. This NDPSR block number is 194.45. That represents a +2 to the CME 1-week average of 192.10. We traded 17 loads on the CME last week at essentially the 192 price, so those sales go in minus freight. That might have pulled the block basis down. +2 is a little bit under what we have been experiencing as of late when you're talking about the relationship between NDPSR blocks and CME weekly average. It's also interesting, in addition to all that weight that we traded on the CME last week, that this was a high week in the block to achieve that 192, temporarily high before making new highs. So typically we would expect lower than normal basis on a high week for the recent range. And of course, +2 qualifies. That's at the low end of our expected 2 to 4 cent positive basis, and +2 a little bit leaner than the block complex has been running as of late. What's maybe more disturbing is this volume, just a little bit above 9.4 million pounds, well below our expected 12 million, and thus extends the streak that the block NDPSR volume has failed to achieve the 12 million pound expected threshold. So sales continue to lag, and basis at the low end of the recent range, certainly a contrast to the enthusiasm that we're seeing on the CME as of late. Up next in the barrels, 199.93. That represents a +4 to the CME 2-week average of 196.17. Only 7 loads traded at the CME in barrels last week, so not a lot of help there on the visible sales front. Again, this barrel, that 196.17 2-week average, that's the high 2-week average again for the recent range prior to, this week making new highs. So that 196.17, a high price, +4 at the low end of our expected barrel range. At that low end of the barrel range, the manufacturer were able to move 12.2 million pounds. So again, short of our 13.5 expected barrel volume, but 12.2, not too shabby relative to recent weeks' sales volume. And it's interesting to point out that once again, the premium that the barrel holds over the block persists for an additional week, with the barrel trading a nickel over the block here on the NDPSR, with the barrel carrying a higher basis in addition to the edge that the barrel price holds over the block price on the CME weekly average. So on both, barrels are a premium currently, and we've seen that follow through this week as that block barrel spread, the inverted block barrel spread, widens further still on this week's CME market. And then we have whey, 47.55. That represents a minus 6.5 to the CME 1 week average of 54.10. We traded 10 loads on the CME, so not a whole lot of weight there. It's interesting to achieve that 54.10. The CME weekly average was up 3.5 cents. Here on the NDPSR, not even able to muster a penny gain, only up about 0.8. So again, negative basis persists in the whey as the elevated levels that we're seeing at the CME are slow to translate to NDPSR values. This week's 6.5 cent negative basis is a new low for the whey. We had been running about 4 cents under. Now this week, 6.5 cents under. Certainly not impressive. What is impressive is this volume and the price relative to the prior week's NDPSR. So 5.3, north of 5.3 million pounds on this week's weight. And this price of 47.55 is a full penny and a half over the July 27th NDPSR value of 46.05. So although that 6.5 cent negative basis is a little bit disturbing, the manufacturer was still able to call a penny and a half premium over prior week's NDPSR. And at that premium was able to move almost 800,000 pounds over our expected 4.5 million pound NDPSR volume threshold. So certainly a win for the manufacturer in terms of both price and volume, and a win in price relative to prior week's NDPSR value rather than the values that we're seeing at the CME. And then lastly, non-fat, 122.04. That is pretty close to flat to the CME 1 week average of 122.30. Now we had big volume at the CME in non-fat. Non-fat was our CME leader in volume, trading 27 loads. So good volume on the CME. Good volume here on the NDPSR. A little bit short of our expected 20 million pounds, but 17.5, nothing to sneeze at as of late. And of course, flat basis, certainly an indication of relative strength in the non-fat complex, especially when you trade 27 loads at the CME price minus freight. All in all, I'd have to call it a win for non-fat this week. So this is week 2 of 5 for the August pricing system. Currently getting an August class 3 expiration of 2048 with August class 4 all the way up at 2151. If you carry current CME equivalents out through the entire 4-week September pricing period. So we have to finish the August pricing period and hold prices steady through the September pricing. You get a September class 3 of 2168, September class 4, 2184. So we have some discounts out there on the futures forward curve. We'll see what they have in store for us in the weeks to come at the CME. Until then, on behalf of Paige and the entire Everegg Insights team, I'm Joe. Thanks so much. See you next week. Bye.